Hey friends, Dr. Hans here, the creator of the first investing tutoring business in the US. So, wanted to talk to you about Bitcoin volatility. Yesterday, my brother told me a fascinating story. I say fascinating because you're going to learn so much from this example. So he came up to me and he told me that a good friend of his invested in Bitcoin in 2017. So that individual invested $2,000 into Bitcoin when it was around, let's say, $7,000. And then he put another $2,000 into Bitcoin when it was around $18,000. At the end of 2017, early 2018, Bitcoin fell about 70%. And this friend panicked and sold all of his Bitcoin. And at that moment, I was like, oh my gosh, why did he do that? And my brother said because he was scared. He didn't know what was happening. And most importantly, he didn't want to lose his money. And in that moment, I understood why this gentleman felt that way. But at the same time, it is something I see happen quite often. Most people don't educate themselves, they don't learn. They want to allocate funds to an investment to see how things go. No, before you invest in anything, educate yourself about it. The amount of money you're going to spend learning about that asset is going to be much less, trust me, than what you can lose if you make the wrong investment. Okay, so always remember that. Now, I wanted to record this video to educate you, right? If you're someone who perhaps you're looking at Bitcoin's volatility, you're wondering to yourself, like, why is it so volatile? Let's start out by looking at different assets and let's look at an average volatility of those assets. So let's say real estate, and then let's look at bonds, stocks, and crypto. Okay. So real estate, I would say you can expect a volatility anywhere between, let's say, about 3 to 5%. Bonds, I would say about 1 to 3%. And we're looking at year-to-year price fluctuations. Okay. So bonds about 1 to 3%, real estate 3 to 5%. I'll say stocks on average about 10%. Crypto, and when I say crypto, let's just specifically look at Bitcoin. I'll put that at about 50% vol. Okay. So when you're looking at volatility, I want you to understand that there are two ways to view volatility. Most people just view it from the downside because the downside kind of sucks. But there is an upside to volatility, right? If you have an investment that is volatile to the upside, well, then you're gaining. And that gain is exponential, right? So that's the great thing about volatility. But you cannot have the good without the possibility of the bad as well. And many individuals don't understand this. So if you have, let's say, real estate, you can anticipate on average anywhere between a 3 to 5% year-over-year growth on that property, right? I'm looking at the US average market. I'm not looking at specific geographic or specific cities or towns, right? This is across the US. Average growth in real estate. So that's the average volatility. Bonds, you can anticipate anywhere between like a 1 to 3%, either upside or downside, right? Now, understand that you can have some black swan events or like a market crash, which can send real estate or bonds down, larger percentages, but we're just looking at kind of like average market, volatility. Stock market, roughly about 10%, right? So S&P 500, when everything is good, you see positives of 10%. When things are bad, you can see that kind of decline as well, right? And when things are really bad, you can see declines of like 20%, 30%, 50%, like you saw in 2007, 2008. And with the COVID market crash in March of 2020, we saw pretty much, I'd say about a 45% dip in the market. So almost 50%, right? So the stock market, you can see those types of one-off events, which happens pretty much, let's say, every decade, where we see close to about a 50% drawdown, but it's not often. But in the crypto market, you can see drawdowns and they can be quite often, right? So I'd say on average, we can anticipate, let's say, about a 50 to sometimes 70% drawdown in crypto, right? That happened in 2013, also happened in 2017. There's kind of like this 4-year cycle with Bitcoin where we have significant pullbacks after a significant rise. So individuals who don't know this aren't prepared. Bitcoin is a new technology, right? We are at the early stages. If I was comparing Bitcoin to perhaps the internet, right now we're right about the time where we were connecting to the internet using dial-up. You remember, I can't speak for individuals here in the US. You're probably using America Online, clicking a button, and then you hear the sounds and you're connected. Back in Ghana, we would have to connect a computer to a modem, dial in from a number to get connected to the internet, right? That kind of like clunky way to get on the internet, that is where we are with Bitcoin. We're so early that this asset hasn't reached global dominance. Pretty much about 2 to 3% of the global population is using Bitcoin. So it's so early. Because it's early, we have 98% of the population that doesn't have the asset. As this 98% group, assuming Bitcoin continues its state of adoption, right, we're going to see that move into Bitcoin, right? It's projected that by 2025, we're going to have 1 billion Bitcoin holders. Right now, we're approximately at about 150 million. I've heard some experts say we're around 200 million, but I'm trying to be conservative. So let's assume we're at about 150 million holders of Bitcoin. Well, by 2024, 2025, we could be at 1 billion, right? That is exponential growth. So that growth means that there's going to be a price appreciation. You can never have that significant level of price appreciation without volatility. When you have growth in terms of percentage, well, that is volatility. Individuals don't realize that. So I say all of that to say that don't let volatility bother you. This is what I told my brother when he was telling me about his friend's story. I told him this: whenever I buy Bitcoin or any other crypto asset, once I commit that money into the crypto asset, I imagine the money is gone. I'm never going to get it again. Now, you might be wondering, what do I mean by the money is gone? And, Dr. Hans, I don't know if I'm comfortable with that. Well, that is something that you have to internalize to pretty much invest in crypto. I'm not saying that I really believe the money is gone, but I have to understand and be comfortable with the idea that it is gone. Once I accept that, the volatility of the market doesn't bother me, right? Bitcoin is going to do one of two things. There's not going to be a middle point when it comes to Bitcoin. Bitcoin is either going to succeed and be an asset that is worth even more than gold, okay? Now, if Bitcoin was worth an equivalent amount of gold, then Bitcoin should be about $500,000 per coin. But I believe Bitcoin is going to be worth more than gold, right? Even double or more, right? So let's say, for the purpose of this video, I'm anticipating that we should see about a $1 million Bitcoin price for me to say that Bitcoin was a success. That means Bitcoin has to either go to $1 million or Bitcoin has to go to zero. Those are the only two options. I have to be comfortable with the idea that when I invest, there is a possibility, I'm buying Bitcoin and it could go to $1 million per coin, or it could go to zero. Bitcoin reaching $1 million per coin, I believe there's a 99% chance it does that. But there's a 1% chance it doesn't. And that is only going to happen if the US decides to ban Bitcoin. If the world decides to move from the US dollar to embrace Bitcoin, then we can see the US have an antagonistic kind of relationship with Bitcoin. So far, we haven't seen it because Bitcoin is not threatening the US, right? But let's come back to our topic. So I believe there's a 99% chance Bitcoin is successful. I believe there's a 1% chance that it's not. Because of that, when I allocate any funds, I understand that, hey, that money is gone. I'm not going to see it. I'm not going to touch it. I'm not going to sell. The only thing I'm going to do is buy more over time. But when I invest, I anticipate that the money is gone. So volatility doesn't bother me. If Bitcoin is successful, right, that presents an opportunity for astronomical growth. And for individuals in underrepresented groups and populations, Bitcoin can present a once in a lifetime opportunity to really build wealth and equity in a financial system that often, doesn't lend disadvantaged groups opportunities to invest in assets with exponential growth. So that's why I love Bitcoin. That's why the volatility of Bitcoin doesn't bother me. I view the volatility of Bitcoin as an opportunity and as a way for us as underrepresented groups to catch up, build wealth and equity. So whenever you hear anyone complaining, talking about Bitcoin's volatility, remember there are two sides to volatility. There's volatility to the upside and there's volatility to the downside. But remember, the downside volatility is limited, right? What is the worst that can happen with Bitcoin? Well, that 1% chance that it goes to zero. Well, that's your limited downside, zero. The upside is unlimited, right? What do I mean by that? I'm estimating Bitcoin can go to 1 million. Well, what if Bitcoin goes to 10 million? That is unlimited upside potential. What if Bitcoin goes above 10 million? So friends, because of that once in a lifetime opportunity, that is why I'm a big believer in Bitcoin.